Hello, and welcome to this brief tutorial describing the use of the Arps Price Magnets. Today, I want to talk to you about attraction. No, I don't care what kind of perfume or aftershave you wear, or what kind of soulmate you want to attract. There are plenty of videos out there to describe how to attract success and money without me adding my 2 bits worth. What I do want to talk to you about today is how to identify price points on financial charts that call the market to them like the sweet songs of the Aegean sirens, only in this case with better outcomes. The Arps Price Magnets are a pair of technical analysis tools which are very useful in identifying mathematically significant projected price points in the financial markets that we like to trade. Although the financial markets are man-made phenomena, these markets are just as natural as humans are themselves. Because of this, there are statistically significant conclusions that we can draw regarding the financial laws of nature. Just as we have been able to mathematically quantify the gravitational attraction of celestial objects, and we've also been able to mathematically define magnetic attraction, just as neuroscientists and psychologists have been able to statistically project probable human reactions to a variety of physical and emotional stimuli, so too are we now able to develop a mathematical formula to project likely price targets on any kind of price chart after certain patterns of buying and selling have occurred. These targets are identified by the Arps Price Magnets. To some, it seems almost metaphysical the way that the price movement is drawn to these levels once the magnets begin plotting their signals. This makes them excellent tools for identifying potential areas for taking profits after you've entered a reliable trade, or for calculating your risk before entering that trade. Let's take a look at how they work and how best to use them. The Arps Price Magnets up and down are these little dotted lines that appear on any type of price chart once a specific sequence of buying and selling has occurred. The magnets will continue to march across the graph until they are finally met by the high or low of the price bar, at which point that particular magnet is nullified. There are 2 important input parameters to the price magnets: the strength and the look back. Increasing the value of the strength parameter will usually decrease the number of magnets which are identified and limit them to more significant price moves. The look back parameter simply limits the number of bars that the tools will study in their search for the necessary conditions to begin plotting a new magnet. Generally, as you raise the strength value, you may also want to increase the value of the look-back period necessary to identify the price magnet. Also remember, you must make sure that there are enough bars on your chart to calculate the magnets. I recommend that the amount of data on your chart be at least 3 times the look-back period entered in your inputs dialog. Let's see how you would use the price magnets when setting up a trade. It's important to remember that the magnets are not trade signals, so the first step is to have a reliable trade setup. For this example, I will use the Arps Trend Exhaustion 1 signal dot, which is one of my favorite trade setups in our library. And you can see we got a signal dot in the direction of the trend here on this bar that had a close just above 75, and the recent low was a little bit above 71, with price magnet already showing on that bar of 84 3/4. So it looks like we're risking about $4 to make 9 or 10, That's better than a 1 to 2 risk to reward ratio. Here's another setup right here next to it. Another trend exhaustion 1 overbought buy signal on this bar. It closed about 79 and a quarter and had a recent low around 76 and a quarter, with a price magnet that's showing at around 95 and 3/4. This gives us a risk of about $4 to make close to 15. That's almost 0.25 risk to reward ratio. I'll take that just about any day of the week. Using different combinations of the strength and look back parameters, you can adjust the price magnets to provide profit targets that fit your own personal trading style. If you simultaneously apply both the price magnets up and the price magnets down, you may want to use a trend filter like the Arps Triple Trender to confirm which price magnet the price is most likely to be drawn toward. The trend filter helps you identify whether the bulls or the bears currently have more magnetic pull. The orientation of the trend doesn't negate the opposite price magnet. That price level is still a valid target. It might just take you a lot longer and a deeper drawdown to get there. I want to thank you for your time and interest in Jan Arps's tools. We sincerely hope they help in your efforts toward consistent profits in today's rapidly changing markets. For more information, please visit our website at www.janarps.com. May the trend be with you.